Hey everyone, metal sector is on a roll. It all started with gold that generated more than 100% return in last 2 years, then came silver. And its rally was even crazier with 160% return in last 1 year. And now everyone is saying that copper is the new gold and its prices are also going up. Today the situation is that Indian equity market is underperforming since last 15-16 months and the metal sector is outperforming. Especially the unprecedented rally in gold and silver has attracted many traders and investors. And now those who missed the gold and silver rally want to play the copper rally. But the question is, can copper really become the next gold? Can it generate outsized return? Friends, to be really honest, I am not an expert in commodities and metals. But the kind of interest I am observing among small retail investors and traders is worrying. Because it is not the first time when metals are rising. If you look at history, you'll find multiple cases of rise and fall. For instance, silver has witnessed an insane rally in the 70s and then it tanked brutally. A similar pattern was observed between 2003 to 11 and then brutal correction till 2019. So I have done some research on metals to answer questions like why are metal prices rising and more importantly, how much can they rise? Because it is not just about entering the party. The more important point is to ensure that you leave the party before it ends. Trust me, by the time this metal party would get over, a lot of people would get trapped. So I thought why not share my opinion with whatever limited knowledge I have and hopefully I can guide you in the right direction. Now first of all, we need to understand the context. So first question should be, how did this metal rally really started? Second question is, why is copper attracting attention now? Third, how can you benefit from the copper rally? And fourth, what is the risk you must keep in mind before investing? Considering all these points, finally we'll conclude what should investors do with metals, especially copper. Alright, let's get started. If you really want to understand this metal rally, you have to stop looking at gold, silver and copper as three separate stories. This has been one long cycle playing out in phases. The mistake most people make is they enter the story only in the final phase, when everything looks obvious. So this rally actually started with gold 2-3 years ago. And gold does not rally due to sudden high demand for jewelry or because mines shut down overnight. Gold rallies when everyone wants to insure themselves against the uncertainties, including central banks. And the global economy has been extremely uncertain in last 2-3 years. The first trigger was inflation. Due to that, cash started losing its purchasing power and bonds became less reliable. And when cash and bonds both feel uncomfortable, gold naturally becomes relevant again. Second issue was rising interest rate and debt. Especially, US is facing a massive debt issue. So there is always a risk of major economic meltdown. Third big factor behind gold rally is geopolitical uncertainty. Be it Russia-Ukraine war, US tariff, China-Taiwan conflict and recently US taking control of Venezuela. Today the world is facing immense uncertainty. And when you have uncertainty, central banks tend to buy more gold. And then fourth factor is de-dollarization trend. There's a clear trend where many countries are trying to reduce their dependence on dollar and hence they're increasing their gold reserves. So the biggest trigger for gold rally was due to massive buying of gold by central governments due to all these reasons that we have discussed. But since gold supply is limited, this gap between high demand and low supply resulted in sharp increase in gold prices. And when gold price increased, everyone jumped in, from fund managers to individual investors. However, this rally did not stop at gold. When gold prices jumped a lot, investors started shifting to silver. Now silver is not just a poor man's gold. Unlike gold, silver also has strong industrial demand from electronics, solar panel, EVs and semiconductor. And when the market is already worried about inflation and uncertainty and at the same time expect industrial demand to hold up, silver becomes very attractive. Another important point is supply. Silver supply is also constrained. So when investment demand picked up on top of steady industrial demand, silver prices moved quickly. This is where the metal rally changed its character. With silver, the move was no longer about safety. It was about returns. And once silver started moving meaningfully, the market started looking at the next logical extension of the theme. That is, metal linked directly to economic growth. That's how copper entered the picture. Now let's understand why copper is attracting investors' attention. By the time the rally reached copper, the market mindset had clearly shifted. It was not about protection or hedging. It was about returns. Copper's story is very powerful and very convincing. Electrification, electric vehicle, renewable energy, power transmission, data centers, all of them require large amount of copper. Now this is not a 1 year or 2 year theme. It is a structural shift that could play out for a decade. So naturally, once gold and silver had already moved, capital started moving into copper as the next logical bet. At the same time, copper supply has become a real concern. So demand is visible in the long term, but supply is slow and constrained. That combination is exactly what is pushing prices higher. Now the next question is how to benefit from this copper rally. Let's have a look. See, the first thing you need to understand is that you don't have to go all in to benefit from copper rally. Metals are not like long-term compounders. They move in cycles. So the goal here is not to marry copper, but to participate with control. The safest way to benefit from a copper rally is indirectly. Instead of trying to trade copper prices, you look at companies that benefit from higher copper prices. But the catch is, today every company that has got some exposure with copper are rising. That can be a disaster. In my opinion, if you really want to play the copper cycle, one of the best proxy for copper is Hindustan Copper. It can benefit from copper rally because it is directly linked to copper prices. When copper prices go up, the economies of mining improve. Their realization increases, operating leverage kicks in, and profitability expand much faster than revenues. Hindustan Copper is India's only vertically integrated copper miner. It controls the entire chain, from mining copper ore to producing the refined copper. That matters because mining costs are largely fixed. Once these costs are covered, every increase in copper price flows disproportionately to the bottom line. So in a rising copper environment, earnings can scale up very quickly. Then another advantage is its long reserve life. Hindustan Copper has massive copper reserves within India. When copper prices are low, these reserves don't look very exciting. But when prices rise, the same reserves suddenly become much more valuable. The markets start pricing the company not on current earning, but on the value of copper still lying in the ground. But here is the reality check. Hindustan Copper is a high beta stock. It moves much more than the copper prices, both on the upside and downside. When copper rallies, expectations rise very quickly. And when copper corrects, the stock tends to fall harder. It is clearly visible from its chart. In last 1 year, its stock price has more than doubled. Currently, the stock is in massive uptrend. Even 3 to 5 year returns are exceptional. However, when you zoom out a little more, you would realize that Hindustan Copper share price is extremely volatile. Just look at 2007 to 8 phase. It zoomed exponentially and then tanked badly. Same rally happened in 2009 and then it tanked more than 90% for the next 10 years. And now its stock is in uptrend since last 5 years. This crazy volatility in its share price is due to its commoditized business, which is clearly visible in companies' extremely volatile margin that directly impact its earning growth. It is precisely the reason why there is no reputed FIs or DIs or HNI holding any significant stake in the company. And today, if you look at the valuation, it is insanely high. Having said this, Hindustan Copper share price can continue to rise as long as copper prices go up. But like I said earlier, metals are deeply cyclical. So you must have some key risk in mind before investing your hard-earned money. Let's discuss that key risk. I think that the biggest risk with metal rally is the timing risk. The thing is, metal rallies are usually most convincing when it is near the top, because that's when everyone starts talking about it. That's exactly when most retail investors enter. But friends, metals don't compound like business. They move in deep cycle. And cycle turn fast. Then second big risk is volatility. Metals don't correct slowly. When sentiment changes, prices fall sharply and suddenly. Even a small change in global growth expectation or interest rate or currency movement can trigger 20-30% correction. Because when sentiment turns negative, everyone wants to book profit at the same time. That's why metal corrections are violent. And when it comes to metal stock, the risk multiplies. When metal prices fall, earning expectation collapse much faster than the price. So stock often fall more than the underlying commodity. So the real risk in metal rally is not being wrong about demand or supply. It's staying too long because the story still sounds good. Because when the party gets over, a lot of retail investors would get caught swimming naked. Considering all these points, let's conclude what should investors do with metal. See, first of all, you should try to understand where we are in this metal upcycle. Copper is not at the beginning of the story. A large part of optimism, be it electrification, EVs, energy transition, supply constraint, is already well known and priced in. That does not mean that prices will crash tomorrow, but it does mean the easy money has likely been made. Second, avoid treating copper like a long-term compounding asset. Copper is a cycle, not a business. You don't buy it and forget it for next 10 years. If you're participating, it should be with a clear view on why you are buying and when you will exit. Third, if you're already invested, this is probably a phase to manage risk, not increase excitement. You can do partial profit booking on sharp rallies or you can reduce leverage. Fourth, if you're not invested, don't chase just because prices are rising. Missing that top 20% of a move is far better than being stuck in the next 30% correction. And finally, with metal stocks like Hindustan Copper, remember you are taking double risk, commodity price risk and company specific risk. These stocks can outperform sharply, but they can also take back your gains quickly when the cycle turns. So the takeaway is simple. Copper still has a strong long-term narrative, but at current levels, don't just get carried away with narrative. Understand both risk and opportunity. And more importantly, understand your risk appetite. Personally, I don't have much knowledge on metal price movement. I don't think anyone can predict their prices. Plus, I don't want so much volatility. So I'm staying away from it. But if you are feeling FOMO or want some excitement, you can allocate some money, but ensure that you exit from the party before it gets over. The only question is, when will this party get over? Unfortunately, today nobody has that answer. So that's it from my side. I would love to know, are you participating in this metal rally and whether copper can continue to rise in 2026 or not? Let me know in the comments. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.